And assumable loans are wonderful things in this particular market when the rate, if you can buy someone's house and get an assumable loan at 3% as opposed to paying the current rate of 6%, oh my goodness, that's huge, right?
Right.
The problem, there are problems though.
This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
The terms of most loans, virtually all conventional loans, is that they're not assumable.
Right.
However, FHA and VA loans are assumable. All of them are. But you still have to you're subject to approval. You can't have anyone assume it. The person has to be approved by the lender.
Right.
Lenders are reluctant to do that, and this is the reason the rules changed. Before, it wasn't a law. There wasn't any rule about how you could do it, but then the Congress got involved because the lenders wanted the ability to be able to say, no, you can't assume these loans.
Right.
We need to charge you today's rate. That's what they wanted. They didn't want, and that's one of the challenges we're going to see as we go forward and look to assume some loans. And assumable loans are wonderful things in this particular market when the rate, if you can buy someone's house and get an assumable loan at 3% as opposed to paying the current rate of 6%, oh my goodness, that's huge, right?
Right.
The problem, there are problems though. They bought that house 2-3 years ago and they paid $250,000 for it and they borrowed $210,000. Now it's worth $300,000 and that principal balance is only $200,000. If you want to assume that loan, you got to come up with that additional $100,000 to get to the $300,000.
Right.
Now, you can either do it with cash or you can do it with a second mortgage. That's a way you could do it theoretically, but unfortunately you're going to pay probably 8.5% for the second mortgage. So you have to do some math still, guys. As a buyer, I still want you to sit down and do some math. Now, if you can find someone who bought the home last year and they're selling it this year and they haven't knocked that principal down all that much and it's still fairly close in price, or the price went up and it came back down to where it is, there's a deal. There's a deal to be made there. That's a deal that you would love. But so you got to look at both. Assumable, but it's got to be enough principal there for me to be able to afford the house. So look at both of those elements. The interesting thing is, as we start to look ahead, if the market prices continue to slip, if they do continue to slip down to a level where they were when they bought the house, then these assumable loans become very valuable.
They do.
Right? And as a seller, you're selling not only the house, but you're selling the loan too, the value of the loan. So you should be able to get the full value for the house.
Right.
You made that point earlier.
You're getting a premium.
You should get the premium for the house because you're selling them, because they know their payment's going to be a lot lower. They should be able to do that. You've been listening to Las Vegas Real Estate Now. If you ever have a question about real estate or any of the other topics we cover, just call me off air or text me at 702-203-1165. You can also check us out on the web at lvrealestateradio.com or on our handle on social media at LV Real Estate Radio.